all of us traders, we began by treating this market as if price is a living thing. It thinks. It does not think. Price is not a living thing. It's like a vehicle. Okay?
If you don't drive it, it
won't go
A to B.
I'm waiting for a retest. Let me sell until this. I'm seeing a fair value gap. Each time they pull back, they want to sell into it. Each time they want to sell into the level. Okay? So if someone is creating sell orders within this phase, is giving reason the market maker to increase value. If the fundamentals say we are going to sell, okay, then I'll find the swing candle on top. And I study how price is actually playing around that swing candle. I don't mean to say that the swing candle is a hammer. Sometimes it is just a full candle with just a small.
Most of us, we know swing candle, we need that Musumari.
No.
And most of us say RSI indicators are lagging. Of course, price action. For you use it. How important is it?
The RSI is the most perfect. Is the most perfect. Maybe if I may explain this a little bit for now to answer that. If I go to the current price data.
In studio today, we have Mr. Scott with his unique strategy and way of analyzing the market. He brings a different perspective into the market. Mr. Scott is one of the most requested guests on our podcast. And today we have him. We had several episodes with him and has been, according to your feedback, has been requested to come over and over. And today we have him here on the whiteboard. Yes, Mr. Scott, welcome to Blocfiafrica.
Thank you for having me. How are you, Bashir?
I'm doing well. How is the market?
Market is good.
Yes.
No problem.
Mr. Scott, for sure, when you look back with the episodes we had previously, I think you're one of the most requested guests to come back into the studio.
Yeah.
And good enough you're here today. People wanted, yes.
I'm glad.
You're glad
to be here.
Yes. So, most as we know, here we are looking at the strategy. For those who have not yet watched Mr. Square's story and the previous 2 episodes we had, he breaks down how he looks at the market, the fundamentals, and what goes through his chart work. So today we are looking specifically the chart and what can someone expect in this episode.
Well, thank you for having me, Bashir, back on Blocfiafrica. And I thank you, everyone who is viewing this. It's been a long time, ever since we last had, and we've had a series of activities during the market sessions and the market weeks back.
Yes.
And everything has gone well and everything has been working on very nicely. And thank you for the guys who have been commenting. Thank you for those who reached out to me. Many of you have been calling. We've been having discussions here and there. And those who have taken actually the initiative to learn my course actually have seen the reality of things that really IMF does give the calculations, and those calculations are very accurate. And the issue is on how to measure them and how to apply them. It's also another story.
Yeah, I understand.
Yeah.
You've talked about the IMF calculations and numbers. Of course, most of us, what we don't know, we think it does not exist. I will give an example when this guy of ICT, Hudson, came on the YouTube. Most of the things he was talking about, people didn't know them by that time.
Yeah, sure.
The way he analyzed the market, So most of the people called him a scammer because he was talking about the things which were totally different from the traditional way of understanding the market. And when you put out the first videos, we had different debates and thoughts in the comment sections.
Yeah.
So, and really, if someone doesn't understand the IMF concepts and numbers and data, of course, we will say that it does not exist.
Yeah.
Yes.
Sometimes when you're doing something out of silence and you come out into the crowd, of course, there are people who will not. Sometimes the truth is not easy to accept, and it's bitter at some point. Sometimes a person, yes, can criticize you in the beginning, but understand later what exactly you were talking about.
Okay.
And sometimes the critics are good to be around.
Of course.
Because from them, you learn. From what you communicate, they learn later. Though I myself criticized the ICT in the beginning, but in the end, I had to understand what he was talking about. And it helps me today. So understanding what they are doing and what I am doing, okay, helps me. Understanding all the strategies people are using is fundamental for me to know when a move is being done in the market, who is it targeting? Because if I see the market maker approaching a certain level, specifically targeting a strategy, all right, it makes me wonder how many of the traders who follow this kind of strategy are doing at that time. What kind of decisions? Are they going bullish? Are they putting in bearish orders? Because liquidity is all about your decision, your final decision. What you saw and what button you clicked.
Either you clicked buy or
sell, or you're clicking both. But
can someone click?
Because if we have like 5 people clicking both, okay, on both contracts, but we shall have, he's contributing both to the buy side and the sell side. As well, later we shall have those who are concluding that, no, at this point the market is going to bounce off, let me sell, or let me buy.
Okay.
So that collective conclusion drives the liquidity we understand.
Yeah, that is very good. Here, you've written, it's not me, of course, you've written the market maker's objective. So as a trader, as someone who has been all looking for the market, first of all, I believe there is someone who doesn't understand what a market maker is, but also the objective. What is the market maker's objective, as you've stated here?
Well, when I say a market maker's objective, is understanding exactly what the market maker is interested in this particular investment. You know, if I'm going to buy land in a specific area, I need to have reasons why I'm buying in areas up areas of Kololo. Why am I buying land outside the city? Okay. Is it for a hotel? Is it for a residence? Or is it for business? Like it's a commercial building. There has to be reasons behind. You know, sometimes we treat, all of us traders, we began by treating this market as if price is a living thing. It thinks. It does not think. Price is not a living thing. It's like a vehicle. Okay?
If you don't drive it, it
won't go
A to B.
It won't go.
Okay.
It needs someone who is thinking, the creator, to move it.
Okay.
So if it cannot think, who is moving it? Definitely. Now, there are two things. It's us, the retail traders.
Yes.
Okay. We have the market maker. Okay. Who I'm calling the institutions and the banks. Okay. Including the brokers, because they are also partly, they are also partly market makers in their own way. Those who are doing B-booking and A-booking. But those doing A-booking, of course, we understand they are just filling in orders directly to the central system. I want to understand one thing, that if the market maker is going to inject money into the system to move it, there are two people, okay? It's us, the retailers, who are coming to buy or sell. And there is the big institutions who are actually keeping our money that are coming to sell to us what we are buying or buy what we are selling. It's very important for us to understand that whenever we are in the market, there are two things involved, all right? It's either you, the retail trader, okay? Let me just clean this off. You are put into the system, which I call the interbank system, where we have the banks, okay? We have the hedge funds, okay? We have the brokers, okay? It's a whole ecosystem. We have the fund management, okay? Michael. Yes, and then we have also us retail traders. All these are institutions.
We are all into the same basket.
Yes. Asset management firms, okay? So
the BlackRocks,
yeah, exactly. Those guys who are actually doing the biggest investment. Okay. Now, they section us into two, okay? It's what all of us are in the same ecosystem. Now, this is what I term as the okay? Interbank, okay? Interbank system. You understand? Now, under the interbank system, I expect when I put in an order, it's either being bought randomly by BlackRock,
by any participant.
Or I'm buying it from BlackRock or any of these participants. Am I clear?
Yes.
Last time when we were on the show, I said I will show you the liquidity pool.
Yeah.
Okay. Now, the funny thing, the liquidity pool, okay? The liquidity pool only encompasses brokers. Who is a broker? Is a middleman between the retailer, the retail trader, and who? The ecosystem, the interbank system, IBS.
Okay.
Am I clear? So if your broker is an e-booking, okay, you will cross, the broker will just route all your orders into the system. If your broker is a B-booking, okay, is a B-booking kind of a broker, all these orders don't make it to the interbank system. They stay with the broker. All right? So when you lose, you're losing to the broker. When you make money, the broker is paying you.
That's why we say brokers are trading against us.
Yeah. And there is a trend going on. I have had a complaint in Kenya where traders are actually complaining about a certain number of traders who are marketing and a broker purposely for them to lose money so that the broker can give them a percentage of whatever has been lost. So he will recruit you by their links, but they are not focusing on helping you grow or helping you advance from where you are to another stage, but they want you to just trade without reason, without questioning, okay?
Yeah,
they indoctrinate you that this is how things are supposed to be done. You just do. Follow their lead, just do without question. And when you lose, they will go to the broker and say, I helped you make this amount of money through the losing people. But also, there are also other type of, I would say, it may be our own mistake as traders. If we are not well prepared for the system and we are losing money, of course, the broker is keeping this portion.
When I started trading, there is one prop firm, which was, of course, scrapped off. What it was doing, it was slippaging, like traders. It was making sure that you lose even if you're not supposed to.
That's why you've seen funded brokers, fund brokers like what do you call those accounts?
Prop firms.
Prop firms. Okay. that they will make sure that you lose the challenge because they just don't want to pay you back. But
if you pass,
they put so many
put
rules. Yes,
some
they put
rules,
so many rules to just to justify you. Okay, just to justify you. It's like I used to say, why have I gone through primary, nursery school until university, all the 16 years just to qualify to earn just 200 or 400,000 Uganda shillings, which is just $100. I didn't take 16 years to just qualify for such a salary. I mean, I need to do better. So this is one thing why I always request that traders, trading is a solitude business. When you understand solitude means that you work in your silence, work to develop what you see. Okay? Everything, if you are having a challenge, challenge yourself to solve that challenge. All right? Yeah. You are improving you. You're not trading to show others. When I met one time, I met a Haji who gave me around 10 of his kids to train, and they were doing good in Forex. He ever told me one thing, that money should never change you. I moved into his compound. It was a shabby home. But if you wanted to know that the guy is rich, just enter into the house. That's where you will see where the money is. But outside, he kept it like it's normal.
A normal house.
He drives a very good car, but the compound is just a normal home.
When you enter, you don't see
you just see a compound, a small house. It's a usual house, just like in the neighborhoods. But when you enter in, that's when you realize that the guy is loaded. All right? And he told me one statement that, Jimmy, I'm giving you 20 million. Okay? Because he paid around $500 for all the 10 kids. He said, I'm giving you 10 million. And then you pick the next 10 million after 2 weeks.
That is about
20 million. Yeah, for just the kids, because he had seen the change that had come with their mother, trading Forex, after he took my mentorship. Now, he said to me that money should never change you. You can have money, but keep it cool. Yes. Or else you're going to attract the wrong kind of people around you. All right? So, getting back to the question that if we are looking to trade, we should look to better ourselves.
Yes.
And not to do it to show others that we are better, but to do it to progress ourselves from one level to another. That's what I would think any trader would need to do. Now, understanding the market maker objective, okay?
Yes.
Is if the market maker is interested in moving bullish, okay?
Yeah.
What are other traders doing? His objective is always to buy low, and sell high. Let's say this is an uptrend. And when it is going down, he buys low
and
sells high. This is the high side
of the sell
of the downtrend.
Why not here?
Okay. When we are looking at two assets, let's say, give me an asset.
Let's say XAU USD. Okay. That is gold.
XAU USD. This is gold. The best currency or the best asset is gold here. Okay?
Okay.
XAU. All right? And USD is up there.
Yes.
It's cheap. And it will be expensive.
Okay.
All right?
Yes.
And this gold here is cheap. And it will be
expensive.
Expensive if the market goes higher. Now, the market maker's objective is one of these two. As a payer, he cannot invest on this and again invest on this. He has to invest on one.
And so there.
Okay. It's like walking on a path, yeah? And you find a dividing path and you want to walk the same routes. You want to go all the same routes at the same time. You can't do that. You have to choose one.
Okay.
So always the market maker will invest on one. Where, I would say, where, okay? Where is The money. Okay? The money is where the traders are not.
Repeat?
The money is where the traders are not.
What do you mean?
So work so hard to know what your fellow traders are thinking. Where they are is not where the market maker will put his money.
He will put where...
I will explain why. It is not done intentionally to help a trader, or rather to fault a trader lose money. Okay? It's not hunting you or stop hunting you. It is intended, it is business as usual.
And we have this notion of institutions and banks do stop loss, and they say where we put our stops and they come for them and the market goes against us.
He's not interested in that.
Why?
He's actually not interested in stop hunting. Yes, people understand that. I'll put it like this, all right? So that it's clear, all right? I really don't believe that the market maker really does interest himself in hunting anyone. It's only we who do mistakes and want to find someone to blame, okay? Now, let's say if the market was coming, I'll use a red pen here, a red marker. The market was coming down, okay? Over the sudden, the market starts going up, okay? Am I clear?
Yes.
Now, I want to ask myself, by the time I see the market at this phase, it started somewhere here, I would say.
Automatically, yes.
So,
what if it started from here?
Well and good. But I'm giving one scenario. Let's first focus on one.
Okay.
Okay. Now, this market started here, all right? And this is the phase where everyone believes it is selling. Okay. And when traders see, or they're using moving averages as indicators, or they're using systems that tell them, oh, now the market is very bearish. They say, the market is in a bear run. So they will come and we open sell orders here, because that's what we have been told, right?
Yes.
We sell. Who buys what you're selling?
Other traders.
Very good.
Yes.
It's other traders. But who invested?
What you're selling?
Who made the investment here that brought the market down? I told you, one currency is cheaper. Let's say, we were talking about XAUU, USD, right? So we said the dollar, the USD is at that time point, and XAU is here, all right? Who injected money to bring the market down? Was it me, the retail trader, or the market maker?
Of course, the institutions.
Very good. If he injected money, it was cheap. What is it right now here?
It is expensive.
Very good. The dollar is?
Expensive.
Expensive. So when you come and you are selling, what are you selling? Remember, in the last video, we told you that whether you press a buy order or a sell order, it only affects the base currency.
Yes.
Okay?
Yes.
It affects the base currency, meaning it will affect the gold.
So when you're buying here,
so no, it is not your buying. If
selling,
people come at a later stage and they didn't sell with the market, they sell here. They are selling gold at a cheaper price,
and then buying
the dollar, which is already expensive. Which brought us back to the objective: buy low,
sell high.
Buy low, sell high. So the market maker bought the dollar cheaply. He invested to increase the value of the dollar, making gold cheaper because their gold was expensive. Now it's been made cheaper.
Cheaper.
So the market maker is acquiring your gold at a cheaper rate. You taking an expensive currency.
dollar.
So when you sell, you're selling away the the cheap gold, buying. Because we are doing two things at the same time.
Yes.
When I'm selling, I'm buying something. Okay? It's barter trade, like I said before. If I give away, I'm receiving something. So here we're in currency, value exchange.
So
if I sell a value, I'm receiving another value. The question is, am I receiving what is what I'm giving away? I'm giving away a cheaper currency, taking an expensive one. Yet in real business, we are supposed to buy cheap stuff, add a value or add a profit, then we sell it away. That profit is what keeps us in business. That's what we are going to go back to and say, I made a profit. So once we sell it away and the bank buys it cheaply, now it will invest on gold and change their investment from gold, from the dollar to
gold.
Very good. Now they will increase the value of gold. So whoever did not buy at this point and instead made sales will begin of thinking of buying at a later stage. If they don't begin doing sales during this phase, okay?
Which most of us do.
I'm waiting for a retest. Let me sell until this, I'm seeing a fair value gap. Each time they pull back, they want to sell into it. Each time they want to sell into the level, okay? So if someone is creating sell orders within this phase, is giving reason the market maker to increase value. Am I clear?
I get you.
Now, you said, you talked about the market maker hunting people's stop losses. He actually is not interested in hunting anyone's stop losses. He's interested in holding you in that floating negative.
Okay.
The more you put a stop loss, it is a disaster, but he has to fill that order. That's why even when the market he has made it expensive, okay, at that side where the gold is already expensive, he needs buyers up here. So if you did buy here cheaply, he needs you to buy here because he will be selling, okay?
Selling to you.
Selling at a higher price, what you're buying, which he bought cheaply. At this point here, gold was cheap. You understand?
Mr. Scott, we are not yet started, Banai. So we are just starting. And if you haven't watched the previous episodes, I believe, go and check the previous episodes because this will make more sense if you watch we had part 1 and part 2 of him making chart analysis. So as we are starting our session, one would want to know as a trader, when you wake up either on a trading week, it is a Monday, or it is a trading day, either Tuesday, how do you set yourself for the market?
Well,
yes,
it's a very good question. First of all, I want to understand. I have to look at what trend, okay? What trend? In most cases, actually, when I'm making my choices of assets, I look, one is what is the bond market doing, okay?
Okay.
The bond market defines the interest market. Okay. The interest market will define the currency market. All right. The interest market will define the commodity market. Okay. These markets are very important for me to understand the flow. All right. So understanding the bond market is understanding the economy. Okay. Revenue collected, inflation, interest
GDP
rates.
growth.
Because bond collections or bond repayments or remunerations on those bonds actually affect so much the interest market.
The interest market.
Or the performance of the interest market. The interest market is driven by liquidity as well.
Okay.
These are the things that actually affect the interest market apart from the bond market as well. So the liquidity is commonly identified in the currency, demand, and supply.
Okay.
The demand of a currency and the availability of that currency is very important when we are assessing the market. As well, the availability of the currency determines the power purchase
of any
what we are calling the
CPI,
CPI, which again is a measure for inflation. Okay, it's a lot to cover.
I get you.
It's not something I can explain in a bit. This is all the round table for fundamental assessment. I need to assess what the bond market is doing, what the interest market is going to do, how the currencies are going to react in relation to liquidity. Liquidity is also predetermined by the supply and demand. Okay? And all these, I can say, are not on the chart.
And there are two things here you're talking of, maybe three. Liquidity, supply and demand, and then fundamentals. To start with,
when I say fundamentals, I'm actually rounding up the entire table map.
Most of us, when we say we are looking at fundamentals, I'll go to Forex Factory, invest.com, and I look at the red folder.
That's a calendar. That's not fundamental.
Then what you're saying here is...
It's a calendar of reports. A calendar showing you when the report will be released or the news will be released. And when it is released, it becomes a report. Okay?
What part do fundamentals play in your
They play a big role because everything that happens on the chart actually starts from the fundamentals. So the easier it is for you to understand the fundamental approach, the quicker you will know what the markets are doing.
What is the difference between the red folder that I'm waiting for CPI at 3:30 or 8:30? Then this, you're talking of bond market, interest, currency, commodity. What is the difference between the trader who is waiting for that red folder to place either both, because you said someone can place buy and sell simultaneously, and someone who is doing this in the as you're starting your
in the fundamentals? Normally, whenever I'm opening up my week and I understand this, I always go back and ask myself, if the market was already selling, I would say, are the fundamentals I'm seeing describing the start, or they are describing the start at the end? I want you to understand what I'm saying. There is describing the start at the end of the market, and there is describing the end at the start. That is the illusion. These things work psychologically. You know, understand psychological stuff. Like, I tell you this when I mean this. I'm creating an illusion. A diversion, in other words.
Just like a magician.
I want you to look at the news that come.
It gives you this hand.
Very good. Now,
the object is here.
When you're on TV, on Bloomberg, you're waiting for
the
news release, okay?
Yes.
And discussions are always brought as the headlines, okay? As what?
Headlines.
And you'll find that headlines are visual. The market maker knows that what if I put this type of a headline? Who is going to perceive it in relation to what I want against what I'm looking for?
Okay.
Or against what I want, or in relation to what I want. So he puts the headline there. So it's up to you to define whether this headline is fake at this point. Is what?
Fake.
It's fake. It would have worked here, not here. Am I clear?
Mm-hmm.
If I found the market is halfway, why are you giving me the headline that should advise me to go back when your intention is to continue down? You understand?
I get you.
So I used to follow news myself whenever around the 2019, 2020. My brother, whenever NFP would come, I would feel sick. I would visit the toilet several times. I would wonder whether I should be in the market when the others are there, or I should stay out and wait for the first 15 minutes. You understand? Understanding the fake news, okay? To ascertain, are we reading the news that is being released at the end of business? And what is the intention of the market maker? Because I told you in the beginning that the market maker has control over the market, over the news, over the media.
Everything.
So if they are loaded to influence the news that you see, all these guys, the great economists you hear, the guys you trust, are part of the system. If you want to trust them from one point, understanding at what point they are bringing the news, what is the intention behind? What is the issue behind giving me news, showing me continuation when you're ending business?
It is the end of the move.
And you're showing me news that we are still continuing. Or why didn't you give me that news, that particular news, when the market was at the starting point? Okay?
Yes.
It would have helped. But you're giving it to me at close of business. It becomes inducive. It is only meant to induce me into the market to sell. If you bring a recession news, okay, we shall talk about that, about how liquidity supply is when supply, because what we are looking for here is news is intended to call in supply or call in demand. So I want you to ask yourself, if the market maker cannot call you to make a wrong decision, because that will be a lawsuit, okay, you cause me to lose money. Guys, this is not financial advice, but it's for educational purposes. If they gave you a call and told you to buy and they sold it to you, what, and you lost money, what would happen? You would sue, all right? So what we are looking at is the news being inducive, coming in at the last hour when the movie is actually ending, or the news is coming in at the beginning of business.
Yes.
So you will find that if we may look into how exactly I look at my approach. Okay. Most cases I'll look at the big trend. Okay, let's say this is it has been in a downtrend. The daily has been in ups and downs. Okay. And the 4 hour is in many. Okay.
So this could be this is daily. This is 4H.
The other one is weekly chart.
Okay, weekly.
So I would ask myself, if I went back into time, okay?
Yeah.
The market is not yet here. All right? How big is the distance the weekly chart is supposed to cover? Okay? How many candles of the daily am I supposed to have? All right? I need 5 candles.
Candles in a week.
To cover the weekly. How many of H4 do I need?
5, about 20. H4.
Because this is going to be 6 candles
per 24 hours.
For the times 5. That should be around the 30 candles. So I'm going to look at what point I am of the week, okay? Because I may put this as a weekly candle, but this is not what I'm looking for at the weekly candle. I can't have a weekly candle be so long like this, okay? I'm looking at the whole context. If the weekly candle is supposed to come to this point, all right? You may find I have one candle here, I have another candle here, I have another candle here, I have another candle here, and so on and so forth. Okay? Each candle of these has 5 of these. Okay? Let's say this candle is the entire 5 days I have here. But I still have how many candles to go? So this is why I measure the weekly, okay? Weekly range, okay? I want to know when I open the day of the week, the first Monday, okay? I want to ask myself, am I at the start or am I at the end
of the weekly range?
Or am I midway? Where am I? All right? And of these, on this candle, if I'm having this candle, it will be predetermined by how many candles. I'm supposed to have 5 working day candles in this 1 week on the range I'm supposed to cover. Okay? So, weekly, have I moved halfway or have I moved the entire range? If I find myself I'm in the last candle of the weekly range, I know how I have supposed to risk less close of business. And I know exactly how 4 hours will look like. Okay? So, determining where I am will help me understand the risk in the market. Understand the whole market range as I will illustrate on the chart. Okay? Am I at the start of the season, the sell season? Because here I'm using red, sell direction. Am I at the start of the sell season or am I at the close of the sell season? If that is identified, I will then ask myself one thing or two, okay? How much liquidity is required for the market to do this kind of move?
To move the entire range.
Where are the traders and where is the market maker's objective? What is his intention in this? If he bought earlier, he's going to look to sell here. When I'm looking at a weekly chart, actually, this is how I look at things. A weekly chart will give me a whole year data. That is from Jan
up to
December. Very good. Okay? When I'm on a daily chart, I'm looking at the first day of August until 30th. 30th of August. I'm saying I'm looking at math. January alone, February alone, because the daily chart will give me the start of the first day of the month until the last day of the month, minus the weekends. When I'm looking at 4-hour charts, okay, this is where I'm looking at the weekly range.
Like from Monday
to Friday. Very good. Now that's what you determine as the daily candle. All right? So things work the other way. 4-hour, which I'm calling H4, 4-hour will give me a weekly
range.
The daily will give me
the monthly.
Okay. And the weekly will give me
the annual.
Yearly.
Yes.
Okay. So that's how things work for me. So when I'm assessing, I don't need to go to my monthly chart. Go to 3 months. That data is too long and too slow. Okay?
Yeah.
Too long and too slow. Why am I saying so?
Meaning it will be like 10 years. if
Very
you're on the
good.
monthly.
It's a waste of time. Now, why am I saying so? Going into all that data behind there.
Now here we are looking at the structure, the trend, how you determine your...
Exactly.
Okay.
That's what I'm going into.
Okay.
So I want to understand one thing here, that can I use an uptrend now?
Yeah, it's okay.
Okay. I want to understand one thing. If the market made its first move, okay, I would use point A to point B. Okay. What type of move is this? Okay.
Okay.
If the market has been already trending, what is going on every break point? Before this point came into play, okay, market was somewhere, was here at point A. It creates A, B, A, B, A, B, A, B. Am I clear? I would say it is a repeated pattern.
This is your first point. Let me say A1, A2, A3, A4. This is... Okay.
Okay, let me say. Let me say. I don't want to call it A1. I'm going to say from point A to point B. Okay?
Okay.
I want to know this as wave. Okay? Wave 1.
Okay.
Wave 2. Wave 3. Okay?
Yeah.
When you are analyzing the market and you open the chart and you find yourself in wave 3, there is no business for you in wave 2. Don't waste time making analysis in wave 2. And definitely not in wave 1.
But some of us, this is where we...
You only need to know one thing. When the market is creating waves, it will make 5, between 3 to 5, at most 6, but normally they stop at 5.
On which time frame?
I may say all time frames. All time frames.
Okay.
The bigger the time frame, the smaller the waves. That's why I'm saying 3 to 5. So if you're going to a weekly chart, you may literally have 3 waves at most. If you go to a monthly chart, you may have 1. Okay? The bigger the time frame, the lesser the waves. The smaller the time frame, the more the waves. So if I'm in this, they'll be treating wave 1. I may have on a daily, I may have 3 waves to complete this 1 wave. And when I go to 4 hours, I may have 1, 2, 3, 4, 5. I close 1. Then I start this one again. 1, 2, 3, 4, 5. Okay? Then when I'm hitting the last one, I may create 1 or 2. Why am I saying this? Because the market is fond of increasing momentum
at the end of
business. Okay? At the end of the first structure on a weekly, it will be the third on a daily. But on 4 hours, I have created several. Okay? So you'll find that they increase momentum. Okay? Let us use this. Increase momentum. Okay? At the end, while they did not increase, they were too slow during the start. Like one time in the previous sessions, I told you that the market maker, when he's actually starting a move that is profitable, he moves very slow as if he's not going.
Yes, of course.
Do you know someone, when he steals something from your neighborhood, he doesn't want to run immediately to alert someone that he first walk, understanding that No one is actually looking. No one is looking at him. Maybe by the time they realize at least he has covered the distance. The intention here is, when I talked about the liquidity, okay?
Yes.
The point in all this is the market maker doesn't want buyers when he's starting these moves. He wants buyers in the last phase of the daily chart, at the last phase of the weekly, in the last quarter of the 4 hours. Not at the starting stage. Here he needs more of sellers. So if I'm in the market and I'm coming into the system, I first ask myself, at what position am I? To assess the risk. I told you one time when we were here that risk is not on the money. Risk is on the chart. If you come into the market and you're trading a risky season, like you are in a comfortable one at the beginning, that's where the biggest money is lost.
Mr. Scott, to tell you for sure, because this is the slowest, this is where most of us drop from. Because you enter trade here.
That's where you say markets are consolidating. Markets are so slow.
That whenever you're in a trade, skeptical. It comes back.
Skepticism grows.
Yes. Because you're giving out
under such situations,
profits.
That's why last time when we were in this session, I told you that you need to understand one thing or two, okay? When everyone is skeptical because of the price,
of the market,
unexplicable price behavior, everyone is very skeptical. That's when you go greedy. That's when you should go greedy. When things align, okay, and they're clear, when everyone is so sure, you get skeptical.
And this is where we want us to buy from. Everyone tells us, stay aware of this consolidation. And we will enter when the direction is clear.
Who is everyone?
The mentors, me and you. This is what we teach. This is what we are told. This is what we teach. Yeah.
If everyone is very skeptical, you should go greedy. I'm going to show you a scenario of that sort on an asset. Because out of this noise, the guy has set a market situation, okay? He will, by the time he exits this, he has already set what we call my swing candle, okay? A swing candle is where he has placed his positions. Out of this consolidation, before it actually breaks, you should know where the market is going to break from and sustain.
And I should use
now, whenever we shall see, whenever you see in ICT, we used to say consolidation, okay, mark the range. If price breaks out, that is expansion, and we are going to distribute, okay? This notion comes also in the bigger time frame, when the market trades within a certain range and suddenly breaks out. And people are waiting for a retest to go sell side. Okay? That's a scenario. Some still have the other notion that if they break from low, we are going bullish.
Yes.
That's why you normally find someone creating a setup like this and says, where do you think the market is going? Down or up? You remember in the first session I told you, we are the same people, all of us around the world. Some are seeing the duck, some are seeing the rabbit. But there are some who are seeing both. They can't say the market is selling or buying.
Of course.
Now this is what
the buy.
This is what I would assume is being bearish and bullish at the same time. It's a confusion, no decision made, because the inexplicable price behavior is hard for the trader to understand. So In my approach, fundamentals actually tell me where the price will surely maintain. And if the price is going to maintain the bullish side, then I'll find the opposite reasons the market is holding on to. All right? If the fundamentals say we are going to sell, okay, then I'll find the swing candle on top. And I study how price is actually playing around that swing candle. I don't mean to say that the swing candle is a hammer. Sometimes it is just a full candle with just a small.
Most of us, we know swing candle, you need that musumari.
No.
And another thing, the fundamentals just justifies the price action. Those are the two notions, that fundamentals I just come to justify where the market is going. And then the swing candle.
Fundamentals don't justify.
That everything is here on the chart. They just want to move
let's
price
say,
there to that.
Let's say you have a headache. Do you think I understand that you have a headache?
No, you can't.
I can't. So those are fundamentals. They are unseen. By the time I realize you have a headache, that's when I see when you're weak.
The symptoms.
You're crying, maybe.
Have some tears.
You're taking Panadol, but still I can't see the headache. Agreed.
I get you.
Fundamentals are like that. They are unseen in the chart we are trying to trade. It's liquidity, okay, is unseen. You can't see it on the candles. You can't.
Mr. Scott, when I see equal lows here, equal highs, this is liquidity. Liquidity is here on the previous highs and previous lows.
Let's say you're saying equal highs or equal lows. Okay? There is liquidity. When the market was coming from where? Equal lows, okay, maybe the market was coming down. Equal highs, the market was coming from down going high. So we have equal highs, okay? And we have equal
lows. Now, how do you define liquidity?
So you said liquidity is defined here. We said the liquidity is the number of lot sizes.
Yes.
A trader, okay, punches in. Okay.
In the market.
Punches in the market. So I want to ask, how many orders and how many lot sizes did we get at this point? Maybe the only person I would say has a very good track, but still unexplainable, is the volume footprint. Okay? Those who are trading with the volume footprint strategy. Because at least for them, they will assess a point of what?
Point of control.
Point of control. Okay? But still on the point of control, it's not that liquidity was there. They want to call it volume, okay? Volume, but it's not where that's where the orders were. No. Point of control actually is sourced from a figure under the put to call options.
Okay.
That's where it comes from. Point of control is always given by 8 a.m. Okay? 8:30 a.m. every single day.
This is our
every Monday before the start of the week.
East African time or the...
Now I'm in Africa.
Okay.
I'm in East Africa. I'm using my East African time.
Yeah.
Because I can't say I'm going to say the time for someone in Nigeria, someone in Gabon.
Some of us who trade ICT We trade a third of the New York.
And that is normally for us here in Africa. We trade under time zone which is +3. +3 is my time zone, and maybe you could search it out there if for you who are following.
So every 8:30
Monday. Yeah, that's when we get a point of control. So point of control has relations, because there are some point of controls where price will never go to deliver to the first levels or second levels, because of the price difference is quite too big. That requires them to have covered that within a week, 500 pips, whereby we don't have that liquidity to cover that all distance. Or investment is very low. Now, the market maker normally looks at what we call popularity, okay? Popular, okay? Popularity of an asset. If an asset is less popular, you will realize that liquidity is very low on those. And for us to calculate and understand liquidity, okay, you may find that an asset has 1,000 lots. Okay. Where we know, let's say it is 1,000.2. Okay, 0 lots. Okay. Now, for one standard is equal to 100,000 units of a base currency. Okay. Now, I want to say base units of a base currency. So you get 1,000 times the 100. You understand? You'll tell me how much money you have.
That is about 100 million.
So your broker says if you have $10 and you can use a 0.01, I'm lending you 1,000 units, okay, for you to participate. This is the limit of the units you need to participate in the market, but you don't have $1,000.
No,
okay.
You have just
so you have 10, 20, or 30, okay? So to give you the leverage of using this much, that's why they give you
the 1-to-1.
No, the leverage. Very good.
They give you
the leverage so that you can participate. So if your leverage, you have been given 1 to
1,000,
maybe to 50.
Okay.
You're going to get
your too small.
Yeah, it's too small. So if you have $30, you put your $30 here, okay, times 50.
That is
this gives you a
1,000. And
you can do the calculation there.
15,
no worry.
100,
30.
1,500.
1,500. Meaning with 1,500, you can participate at a contract of 0.01. You can participate in the market. If you have, let's say, $100, okay, and times 50, okay, that is close to 5,000. Meaning you can put in 0.01, 0.01 contracts times 5. So meaning if you can use maybe a control of 0.05, all right, making this times 5 to give us 5,000. So lot sizes work like that in liquidities.
Okay.
So when we are looking at liquidity positioning, okay, we are looking at how many lots are in an asset. If there are 1,000, of this 1,000, how many are sell orders and how many are buy orders? You understand? The more I understand this, I am understanding the participants in the asset. Okay?
I get you.
So, back to the trend. If let's say I'm in an
for me, who is marking my liquidity levels here?
Those are not liquidity levels.
Back to the trend.
Okay.
Yes.
the market has been moving like this. Let's say, for instance, we are not yet there. We are just starting. You found the market here. Okay? Ask yourself, what type of liquidity was here or is here? And what type of liquidity do you have when the market has broken this high? Okay? Why does he need to come to retest or go beyond? I want you to assess. Someone would say, I want to enter here, all right?
Order block.
An order block. Let me just say, I have seen a breakout, okay? The market just broke out. I want to enter. I wait for the market to retrace. The question is, to what percentage? So is the market retracing 20? Okay. Is the market retracing 20% of the previous move? 30, 50, or 90?
Or 100.
Or 100? It's a question. Before I enter the market, I ask myself, how much percentage in retracement is the market interested to come? And what is the intention? What is the objective? Objective is a hidden agenda. You don't see. Well, someone may say the market moved bullish, okay? Now, as it comes bearish, I'm looking for a FVG, fair value gap, all right? I'm looking for an order block. I'm looking for point of control.
I'm looking for demand zone.
I'm looking for demand zone, okay? So, if all these things are presented in one move, so the coming back of the price, is it targeting FVG, point of control, demand zone, or order block? And if it is an order block, how many order blocks have been created during the movement?
And how do I identify the one which will hold?
So, if the market has been moving like this, okay, it has created an order block, it has created an order block, it has created an order block. When it is coming down, which one of these is going to hold the market to proceed, or they will slice all of them and go through them? It's a big question, okay? If I'm following support and, demand
and support,
as they call it, but I know it is support and resistance, that the market previously created a noise here. So when price breaks this point, it will retest here and definitely proceed to the next level, okay? Or it will retest here and definitely proceed. That is the notion. The point is, what if this market, after breaking, it does not hold the price, it comes back? There is another person who would tell me it will respect this, whereby I will have a pattern called the heads and shoulder pattern. The market maker knows all this. So how will he play you? He will go 90%. Avoid this point. Either now, this time he will come back to the order block. Now he knows when the market creates a riot like this after shifting, okay, one would say change of
character.
Okay, change of character, or COC. Okay, he has broken out this. Now, when he comes back to this, he will wait and see who thinks I'm going down, who thinks I'm continuing up. He plays the mind game. But I want you to remember, why did this guy come here? He needed sellers so that he can buy. So all these play games are meant to attract in sellers. I want you to know, no bank opens on Main Street to make a loss. They're all looking for customers. Market makers are just traders like you and I. They're also traders like you and I. They have also come to make money. Whenever you see a red $100 negative, okay, on the market maker side, it is $100
gain
profit. So the game is who takes from who. Exchange with me, we make a profit, I pay you. That's the work of the broker. Pick the money from the market maker, give it to the trader. Right? So if the trader has done wrong, pick the money from the trader, take it to the
market maker.
So we are in a squeeze of who is paying who. Trade right, get paid. Trade wrong, pay the guy. You're not making a loss. You're paying for your ignorance. Someone once told me that if you think learning is expensive, try ignorance.
Yes,
that's when you know how expensive ignorance is. You better waste time learning than waste time with your ignorance trying to figure out why you failed.
Now, Mr. Scott, I'm looking at this structure. Now, what if we come here, because most of us, as we've said, change of character. We don't get that, but we do this, and then we break out again.
Come again?
We don't break at the first breakout here.
We stop down here.
Yes. Then we continue. And
to the bottom, and then we break out.
Yes.
These are all games. Why? Because few people know how the down move was closing. Very few can see the closures.
I can say pin bar musumari.
A pin bar is price action of candlestick patterns.
I can see
market makers are quantified traders.
They don't
even see the charts.
They don't see candles as we see there.
They don't see candles. Quantum trading is like you're looking at the quantities that come into the market that you need at a specific time. All right? Like I told you, if we move down, okay, at a specific number, okay, I already know that once this piece is closed, okay, price is going to move up to this price point twice the distance. Okay? You understand?
Of this piece.
I'm just giving you an example. Into the unknown, they are targeting this price number. Okay? Price number. So, whether I'm trading a weekly chart or a daily, or a 4-hour chart, it doesn't matter. This price number is going to be reached. Whether you squeeze and go to 5 minutes, it doesn't matter. We are all players in the same arena. Some wants to play small, some will trade from here to here, and business is done. Okay? Me, I want to hold until I see them break this point and finish their game. My question is, we have liquidity here, okay? As people would claim that this is important. Price may trap there and come back, okay? Like the scenario you just said. Price came down, all right? Instead of breaking this point, it went down and stayed here and later broke out. It's because you are waiting for a change of character. That's what they taught you. What they did, they are teaching you to come late, wait for a retest, then buy. I told you in the beginning, okay? A guy once sat me on the same desk I'm sitting you here and said, when the market is going down, at this point, where I'm identifying the swing candle. 1% know that the market is going to buy. After it changes, the few learned ones get to learn that the market is coming. We may say maybe the 3%. After the market again breaks, another 1% come in, making it 5%. All right? The 95 confirm when there is increased volatility. The 95% will begin to learn that the market is bullish, okay, when it has actually made a bigger move.
What you say that? Previously, Bitcoin went to from around 30, even 18,000 US dollars to about 120. But you hear so many people are saying, I bought Bitcoin and I'm in negative. And I'm asking, how can you be in a loss or negative at 60,000 US dollars when Bitcoin was at this range?
You are right.
So it means either they bought at 70.
It is like this.
Yes.
The market started at a certain point T, okay? Understood? And went, okay? Targeting for a certain level. When it came to this level, market did this, okay? Everyone drew a channel, okay? Some were because of the inexplicable price behavior. And by the way, when the market starts ranging, whether in a dropping channel, a rising channel,
the bull flag,
what happens? The market maker is trying to squeeze you from the bigger picture. He wants you to go to lower time frames. Squeeze in so that you trade those tight moves. You lose focus of when he's actually exiting. Now, most people who lose money into the markets are people who come and are sold the thing that the market, they are missing out, okay? Which we are calling the fear of
missing out.
The FOMO. They want to buy when things look good. But when things are very tough, they don't want to participate. Our markets are not good. I've had this thing seen many times. Wall Street will send a picture and put a headline. Markets are tough.
Yes.
Or markets are this. They put a face of a guy who is so disappointed.
Who is leaning?
Look here. When the market was actually finishing the move, what are they saying? Sell, please.
The market is falling.
It happened to some people in ICT. It happened to someone in recession times. Okay, I told you before that when the market is at a lower point, they begin projecting news. Okay, that are going to show you that things are bad.
Are worse. We are just beginning the worst time. The depression.
So if you're holding on to the bonds, if you're holding on to your shares, okay, you begin looking to sell them because they're performing bad. And they are showing you that things are going to go even badder. Baddest. Or worstest. So that impression, they are imprinting into your mind. They are trying to print a picture, a panic, that please don't hold what you have, sell it off. But you're selling it off. It's not dump to the rubbish pit. You're dumping to someone who wants it cheaply. The question is, do you know how to calculate how cheap a price is going or how expensive this price is going to go? So if they want you to dump price, they will buy it. Okay? The point is, did you know that the guys at the other side of the banking system are buying?
Not really.
Because when they invest, when does the market maker invest? They invest on surplus. How do we write surplus?
Yes.
Surplus. So the question is, if we are 50, The market is balanced.
It is even.
Sellers will sell everything to the buyers, and everyone will go home satisfied. Whenever there is failure of the two, that's when the bank comes in. It will buy surplus. So if I'm buying surplus, where is the surplus coming from?
From the sellers.
Very good.
Now, how do I know that the trend is here, or the swing candles you've said they are investing your money?
Come again, your other question?
You've said you have to know that where the market, where they are investing, the range, whether I'm in this range, am I late or am I at the beginning? Yes. How do I
in most
determine
cases,
that?
you realize that majority of people begin buying late.
In most cases.
Whereby the bank is selling what it
high,
bought
at a cheaper price.
At a cheaper price. So at what point of the market are you participating? Are you buying what they are selling? Because I told you, go against these guys, you lose. You're like having a small Peugeot vehicle trying to protect a trailer at a steep road. Okay? They will crush you. Sometimes people say markets are merciless. Markets are very merciless. Like I said, if you think education is expensive, try ignorance. Yeah. So ignorance hits us at its best. So in most cases, the market maker would want to create a situation, okay?
You're still on the objective of the market maker.
Yeah, we are doing all that.
Guys, if you're still at this point, you're watching, I believe you're enjoying this video. Please leave a like, subscribe if you're not subscribed yet, and leave a comment. Actually, we want to bring traders like this so that we can learn from them. Thank you so much.
So whenever the market has made a structure, okay, there is, we'll say, a starting point and a closing point. Did you know how the structure opens and closes? Do you know that?
If I see a red candle, then I see either bullish engulfing or a pin bar, then I know now this trend is closing and the new trend is
The
opening.
question is, I told you there are two phases in the market. Accumulation phase, okay? And the pay, okay? The pay phase.
Is it the same as distribution?
No.
Because that is accumulation.
That is in a strategy. I'm not talking about in strategy.
Okay.
The market maker course doesn't have a strategy. Okay. It's a total understanding of how they move the money.
Not a strategy that I'm
very
trading this and this.
Very good. It's understanding the footprint. What I'm showing you right now here is the tip of an iceberg. I'm reserving the rest of these guys. I'm reserving for those who are going to come into the boot camp. They will see every detail of what I'm talking about.
Thank you for mentioning that. Guys, we are arranging a very nice boot camp because most of the people were contacting us to do a course. Most of the people, traders, they want to pay less. Or you said if education is expensive, knowledge.
You try ignorance.
And they don't have the price. So we decided to make a short course.
The course is $800 to $1,000. Okay?
This is not beginners. If you want to understand the market.
This is an advanced course. It's not for beginners. And by the way, some guys have called me and they don't know what is a candlestick. They don't know what is a structure. They don't know. Okay, maybe structure is advanced. What's a candlestick? What's a bear?
Trading?
Who are brokers? What is an ECN type of account? What is an STP? What is the mode of operation of brokers? That is basic information one should have learned before even they come to me. I have told some people to go back and find people who can teach them that maybe meet a few people who
Okay.
disappoint you before you come to me.
Yeah.
Because when you come to me, actually, advanced learning requires you to be straight fast forward. That you pick a few things. You don't go back to ask me, what is this? What is this pattern? Because now you realize, if I may open up a little bit, okay? For those who are going to come for the boot camp, we have made the price as low as $110. $110. We are planning to have the boot camp for 2 days, okay?
Yes.
So those abroad, we shall send a link. Mr. Bashir will organize a Zoom and you'll be live. And those who are physical will get the time. But I'll give 1 extra day to people online to have their question and answers and have a live interaction.
Yes.
And then also those who are physical will have enough time because it will be a full day and we shall have a few things to do together. I will allow you to ask any questions of your choice.
And actually we are requesting those who want to know more information because there is so much. We are organizing the date, the time. Join our Telegram group where you can always ask the questions, ask for the contacts. It is, you can search on Telegram, Blocfiafrica. Blocfi, most people misspell this with a K, there is no K. Or I'll put the link in the description, guys. Use only those links I put in the description about the Telegram. It is a free Telegram group, so you can always go there and ask for more questions. But we are having a boot camp. It will be a 2 days boot camp where you can learn so much. Here we are just tackling a few things that we can't
cover all in one
session.
Because normally the course may take someone around, if is a person open to learning and is free, takes around 6 weeks. That's 1.5 months. And if he's a working class and studies only 2 hours a day, it may take him 3 months because it involves flashcards. You have to do a lot of flashcards and present them for clearly marking so that you know where you're doing things right, where you're doing things wrong. The other thing I wanted to talk about is if the market creates a high like this, all right, creates a point like this, all right, and go down and does this. Many people tend to think this was a structure, okay? This was a structure change.
Breakout structure.
This was a breakout structure. There is no structure here.
We have breakout structure.
The entire structure is this.
I'll mark my BMS breakout bills.
Yeah, you can call them that. That is understanding your point of view from your own understanding, not the market maker's understanding of the structures.
Okay.
So what you're calling a structure, that's why you're going to see a shift in the market. And you say, no, now we are in a bullish shift. So what am I waiting for? Is the market to come here and then I buy. What you never knew is the market gave you that exactly. It wanted you to put in the buy orders, gave you that exactly, and then dumped on you.
So they are selling onto your buys.
Exactly.
So how do I determine the major structure? How do I know that it's trend? Because
that is going to be highly discussed in details in the in the bootcamp, and how to ascertain that this is not a structure.
Okay.
This is actually an internal approach to a strategy.
Okay.
He's going to move price looking for each particular strategy. Okay. And this is why when I come back to that question of your patterns, okay? You said about a bullish engulfing pattern, a bearish engulfing pattern, and how he does that. When he's in accumulation phase, okay? Accumulation phase. He's going to make sure he creates evidence. He will give a fair value gap. Okay.
Mm.
He will create the bullish engulfing, the bullish engulfing pattern. Okay.
Mm.
And you say, oh, I see this.
The order block.
But when
Breaker
he's starting the move, he
Mm.
does not use those patterns when he's starting. He only brings those patterns when he's finishing.
Okay.
You understand? Buy closely, I hit you out. You buy again, I hit you out. Then I come and take out. And you were not ready for this. So I want you to buy because you are expecting the market is leaving you. I want you to wait for the market here, then you buy. Okay? Maybe, like I told you, the 1% will join after another second breakout and wait for another. Okay?
Mm.
Because each time the market is breaking out, they are waiting for a retest at the breaking point. Okay?
Mm.
Or maybe 50% of that or 90%. You understand?
I get you.
Were you able or were you in position to know when price was going to buy here?
I didn't know that the sales is, you said closing, and now we have the open.
Very good.
And the buys.
In my assessment, you are supposed to see the closures when they have not yet been created.
For me, I will see them after they have been. I want to see the break of structure. I'm told if we get this, the change of character, then we shall have this.
Now, there are two things involved.
Mm.
Okay? There are two things involved you should know.
Mm.
The market moves in what we call an impulse. Okay? When I'm having a foundation created, and you see me, I'm constructing, will you see a foundation? Can you tell what type of house I'm building? Whether it will have 5 doors or 1? You won't. Until you see me raise something that is open here and all these are
walls.
Okay?
Bricks.
You understand? Oh, that's when you say, hey, this guy is constructing a structure that is having one entrance. You will not know whether I'm going to only leave one window or two. You only see as things grow, okay? That, oh, the guy has created a window, okay? There are two. This structure could possibly have 2 windows. You understand? I'm using this example. So when we are doing a construction, we are building up. This is what I call an impulse. It's not closed. It's a building. It's a what?
Building.
A building. It's a process of constructing. Okay? So you will see me, hey, the guy has closed off the door, he has closed off the windows. What comes next? The vents. Okay?
The beam.
The vents. And then you're like, this guy is nearing completion. If he has closed and he has created the vents, then the beam. Okay? Then after the beam comes the roofing. All right? You understand? So when you begin seeing me creating the roofing, what comes to your mind? I'm completing the building process. Then this entire thing from bottom to its height is what we are calling a structure.
Yes.
Meaning the structure should have the lower side and the high side. So if your market in your trading, okay, you're still doing this. This is a break of structure. Where did it start from? This one, the one that broke, where did it start from?
Here.
So if you don't define this, you're defining one side of the market. That's why you're having a wrong approach of wait for the market to break, confirm a break, and then get a retest. I told you one time, my mentor back then told me one funny thing, that if the market has been moving high, you can never know that this was a higher low until it breaks. So when do I make money? When price is here? Because all these are pips.
Yeah, if I don't know that the market is stopping here,
very good,
and I wait for the
breakout, this is all pips missed.
We want us, at least you take us through your chart work. You take us through how you look at the market, not on the board. At least you show us how you identify the trend, how you look at the areas of interest, and then your entries.
Well, I'll consider looking at this chart. This is now what we have as a daily. First things first, we are going to look at where the market started from, okay? We are looking at the market started from here until this point, okay? But there are very many segments, okay?
Okay.
There are different segments that the market did when it was coming down, okay? So being a daily chart, the time from this separator, okay? The time from this separator, if I may change color here, it's okay. From this separator to this, from here to here, from here to here, this is 1 month time data, as I may say. Yeah.
If you're on the daily.
This is one time data, okay? 1 month timely data. So now, things I may observe when I'm actually doing assessment is, one, how did the market close business, okay? Because the market started alarming closure here, all right? So at this point, I know the market is entering its closing phase. But the point is, it started all the way here, all right? So going into this high, it needed to, if the market actually bought here, there were sellers here, okay?
There are some sellers.
So when you buy something at a cheaper price, okay, you bought it cheap, all right? You will need to sell it off expensively.
The higher price.
Exactly, expensively, and acquire a profit, all right? A profit. So what does the market maker do? If you observe what is going on here, around this circle, there was noisy flexing candles, inexplicable price behavior, breaking the higher side, okay? Breaking the lower side, maintaining order blocks. But when he was moving here, there was no pattern known to us, like no bullish engulfing, okay? Just spikes. But when he's
wait for a break and a retest, but there was nothing.
When he's tending to finish business, okay? If I may I enlarge this a little bit to bring it out clearly, that you realize as we are completing business, he's creating patterns that are common. He needs you to buy on the tweezer or this bullish engulfing pattern. He's showing you bullish engulfing patterns that are so clear to you, okay? He is bringing tweezers that are so compiled together. He's bringing a morning star, okay? Why bring these such kind of evidences in a market that he knows you know that he's going bullish, okay? He knows you are going bullish.
Now we are starting to see patterns. Previously, we moved high. Now we are starting to see
a slowdown.
Yeah, patterns enticing us to go into the direction of the market.
Very good.
Okay.
The market is getting choppy. Okay. Also, if I may say, he wants you to see that he is breaking this high. Okay. He wants you to find a point of reference here, an order block. Okay. That you're going to retest. He wants you to see, a level that he's going to slash out, okay? That you will call liquidity, okay?
That is our liquidity.
Liquidity sweep.
Yes.
He's going to begin bringing all these strategies, because he wants you to keep convinced by the evidence he's providing that the market is buying, okay? Buying within this phase here, all right? Buying within this phase is buying at an expensive price what the market maker bought cheaply earlier, okay? So it is intended for the market maker to actually price in, okay, make a profit. So whenever you're buying at this level, you're buying an expensive currency, giving him a cheaper currency, which is the dollar. Okay? At this point, the New Zealand is very expensive. But the dollar is cheap. So if you press a buy, the buy order is going to affect the base currency.
The New Zealand dollar. You're buying the New Zealand, which is expensive.
He's selling to you an expensive currency, which is the New Zealand you're buying. And you're giving him
the dollar, which is
cheap. So what is the market maker doing? He is selling to you
the New Zealand dollar,
buying a cheaper one.
The cheaper, which is the
giving us the other notion. They buy cheap and they sell high. So where is the high of the dollar? Okay, the high of the dollar is determined. Okay, is determined from where the market is closing business. Now, if you look at this time play, this is a open of the month, close of the month, open, close, open to close of month. It took him 2 months or 1.5 to create a fake out. How many traders who would know that the market is closing, it needed 2 months of closure? No one is patient.
We don't even.
So if I come to a higher time frame assessment, I first assess, is this type of market I'm looking at, is it closing? I don't want to say, oh, it is bullish because it has come all the way down, now it is here. Yes, everyone is seeing a bullish market. Even a chicken can see it's a bullish market. If you asked a fool that what are the majority candles? I'm saying if you asked a fool out there who is not a trader, and you ask him that, because I'm saying the word fool because I don't mean that he is a fool, but he has no idea totally about the market. I ask him, what is the dominant color here? Of course he'll tell you green. And you ask him, where is this market going, up or down? You say it's going up. Because even a chicken can see this thing is going up maybe, right? The point is, going up, did you come at the early stage or have you come at a closing stage? Are you in position to know that the market is closing or it is just starting or it is midway? Because everyone who wanted this retest did not get a clean one. You understand? And if he comes back, if he did not tap that level and he comes back to this level in the future, what are you going to do here?
To buy.
Very good.
It is retest.
That is how he constructs the illusion. Because when he's moving downside, okay, you are going to be fooled that this was an important level. Okay? So you need to buy here. All right? At this bounce, you need to buy. But the RSI is defining this as not a closure. The market is not closing at this point here. This is not a closure. So there is no need for me to buy it. If it was a closure, then I would buy knowing this is a continuation. But the market RSI didn't confirm that that was a closure. Okay? So, if you look at the flow of this market continued breaking to the lower side, breaking into this, all right? Yet there was this level here still that anyone would think that they are going to buy again, okay? So once I see a closure below this point here, okay, I now know that now the market has confirmed my trade. The new high, as it states it, okay? Let me get this. The new high for the dollar and the starting point for the dollar, define this is one structure.
Not these.
So this point and this point and this point and this point are not part of the structure.
Okay. Just
you must understand the market in terms of context, not in terms of candles and swings. Now, as a swing trader, okay, I study what I call swings. This is one swing comprised of the small swings that are going on, okay? You understand? I need to know the major swing, that everything thereafter is not a structure when I'm on a daily time frame. Okay? When I'm on this daily time frame, not everything that is swinging is a structure. This is where you need to understand who is a swing trader and who is actually a position trader. A position trader will trade this entire thing at once, minus following what is going up, or down. If I'm going to study the behavior of when the market breaks this low, it started here, okay, came here, went back here, came here, went there, then came here and broke. So this format, all right, is swings. So how do I trade these swings? If I may extract, okay, if I may extract this, I want you to observe, a little bit of that. I want you to observe that when the market started here, okay, let me make it more visible, okay? When the market started from this point and came to this point, here it looks like the market did not break structure, okay? Now, here I'm going to be like defining 4-hour chart. The market actually broke structure because the candle closure is the true structure. All right? Now I want you to turn this chart into a line chart, please. Very good. A line chart. So you realize that here we had no price. So this thing here can't be part of the structure. Yet many people are engineered to know that when a candle creates a high and a low, this is the high of the low of the structure and this is the low of the structure. This is not true. The true structure is the closing and opening
of the candle.
Am I clear? There was behavior, fine, because I'm on a daily chart, okay? Now, where people mess it up is trying to find a structure where it is not. You understand?
I understand.
Now, if you turn back to the candles, okay? If we put back the candles, you realize that this part is going to be used as a rejection point, okay? This part here is going to be used as a rejection point that will be used for anyone to go down at lower time frames and set a position here and say, this level is important. That's why they're going to give you a bullish engulfing pattern. For you to trust what is going on, they will show you a shift, okay? Like they have broken. What will you do? You will come back and say, I'm looking for the order block, okay? I'm looking for the order block at this level. You say this is a bullish order block that has ready to break of market structure, okay? Now, this will be a fallacy that if you put buy orders, you'll be trapped and they will take out your loss here. And you will say, they are hunting my stop losses. You understand?
We put, even I'll put one at the lowest point here.
Another one would have put, yes, at this lowest point here. But when you put a stop loss and they still come for it, you still say, they hunted me and they went back up. You understand? But the problem was you did not understand the flow where the market was heading. Okay?
I get you.
And if you take that as a point of failure, not to understand why you failed, and you want to define by journaling that, I took 10 trades and I lost 3.
Yes.
You're missing the point.
As long as
journaling is very good, but you should understand where you're failing that journaling. Why are these trades getting wrong? Most people begin answering this question by risk to reward.
I would ask you, what is your risk to reward?
Very good.
Rate?
What is the win rate? Now, if I may stretch this a little bit, okay, and tap into this so that we clearly understand this.
So
now,
a moment.
Yes, please.
Because most of us say RSI indicators are lagging. Of course, price action. For you, you use it. How important is it?
The RSI is the most perfect. Is the most perfect. Maybe if I may explain this a little bit for now to answer that. If I go to the current price data, okay, and explain this. Where is this candle facing?
Upwards. It is.
This is its open. This is the current running price. This is where it was, the red candle plotted here, and that is the point at which price is on now. It is showing the candle you have currently is bullish. The candle you had, the move you had recently was bearish. This is why if you follow this, okay, it gave you a sell move when the market was selling. It gave you one bullish move when the market was buying. It gave you a sell move when the market was selling. It showed to you that the market is buying when it bought. When the market dumped, okay, from this point here, actually the RSI also dumped. When the market moved all the way from here to there, it also moved all the way to here. The RSI follows every little open and close. This is why when we are interpreting the RSI, if I may open this, you realize that it is told to
close.
Source, give me the closing point of the candle, not the open, not the high, not the low, just the close. So the RSI is going to plot the open. When this candle closes here, it will plot there and make a turn. If the next candle is bearish, you will find it going bearish. Okay. You understand?
And now, Mr. Scott.
Yes, please.
Yeah, for the interest of time, and I believe we have given a lot to these people. And we can't exhaust everything.
We can't exhaust everything.
Yeah, I would just request you, for the interest of time and the viewers, maybe next time, but as we said,
we have that boot camp,
and
the boot camp here we only have 1 hour airtime.
Yeah,
and anyone there out there, brokers who want to like advertise their services, can contact Bashir, and you do have pay for the airtime, of course.
Of course.
Studio time. But otherwise, we are saving more for the bootcamp, because here we have very little time.
And not only to do all this, because if someone is willing to learn, even the 2 days, even if 2 hours, it is not
one day or 2 days will give you a lot of information.
Yeah.
But you will not be practical with me. Okay?
Not really.
I'll give you 1 full day of practical work with me. But I know it may not be enough.
Of course.
To cover all the 8 chapters under the market maker objective.
Since at least you've seen this, they have seen the blips, what of a day or 2?
A day or 2 is good, because
yes.
I'll talk about the IMF. I'll show how the IMF ranges are done.
About the IMF.
I have not actually done because of time.
Yes.
The IMF
talked about the swing level,
the ranges, the swing candles.
So much we haven't covered indeed.
So you guys, if you want to have the best of this, please find time, contact Bashir through Blocfiafrica, ask him when you can book in. And we believe it will be the end of second week of September, because 18th of September will be my birthday. And that time I'll give every information to whoever comes. Every information to whoever comes on that boot camp as a gift back to the market. As well as for anyone outside Uganda and you can't come to attend, those in Tanzania, Rwanda, Burundi, if you're there,
so many,
and you can afford to come to Uganda, you come. Yes. Bashir, you contact Bashir and he'll give you the dates. He's the organizer. Now, for those who are far and you can't come, you can make clearance with Bashir. We shall get you recorded in and we shall create a link for you to come live. Those of you who have registered online and you're very far, I'll have a special edition for you, like 2-3 days of question and answers.
Of more
chat work.
Yes.
But it will be limited by invite only.
Yeah. So if you, of course, if you need more information, join our free Telegram group. You can ask any question from there, more details. Guys, we can't, even if we do, we can't spend the whole day on this. Let us meet in the next episode. Just leave a like, leave a comment on whatever you would love to see, what you would love to hear. Maybe next time we shall be with Mr. Scott. So many arrangements are coming. Mr. Scott, your parting word.
Yes, everyone who has been following this, I thank you for the comments you've been making. I've read each one of your comments. Each one of you, I've read your comments. Unfortunately, I can't reply. I don't know because I'm less used to replies, but I would love to have a one-on-one with each one of you if you can come for the bootcamp. And that's why I requested we have a 2-day bootcamp so that I can have at least enough one-on-one with everyone, ask your questions, interact. I would want we have like a 7-hour talk in a day before meals. And if everyone comes, I will have that time, special time with everyone to ask those questions. But I thank you so much.
Cooking.
I thank you for those who are always revisiting and rewatching. Of course, this practical video recording is not easy. It doesn't come so cheap. I will ask that you contact Bashir. Let us meet at the bootcamp and let us have a lengthy discussion. For those who are taking on the course, coming directly for the course, those ones get actually a lot of time for almost 3 months with me. And they actually enjoy to ask every challenge. They trade with me, they see me do the assessment fundamental, and things happen like magic. And then they are like, how did you know this would happen? Yes. But it's not about knowing what happened. I tried to fight ignorance so that I'm prepared for anything in the market. Thank you so much.
Yeah. So most of the people always ask, where is his channel? Where can we find you?
Like I said in the very first episode, I don't have really time to create content.
It's not on YouTube.
I have time for chats and the people who actually contact me that they need my assistance. Normally, I always have like 5 or 4 students who always come. I don't want to have so many because it involves a lot of work to turn someone into a very fundamental trader and very profitable. But one thing I would say is love what you do. Everything will be okay.
Next time,
bye-bye. Ciao, ciao.